So recently, Chocolate Finance has just launched and it is promising a return of 4.5% per annum, which easily beats many of the other places out there, such as high-yield savings accounts and even money market funds. In this video, I'll be sharing everything you need to know about Chocolate Finance. What is it? Is it even legit? How it works? What are the risks? And of course, how you can sign up to them. Also, do join my Telegram group to discuss everything related to money or ask any questions that you may have. Alright, let's jump right in. First up, what even is Chocolate Finance? Is it another crypto company that wants to scam my money? No. As mentioned on their front page, there's no crypto in there, and there is MAS regulations. In fact, most of you may have even heard of the founder of the company, Walter the Older, who was previously the founder of Signup. He built the Signup account there, which offered 2.5% when banks weren't offering that much, but left Signup after their merger with Aviva. And to add on, Chocolate Finance have some pretty reputable investors, such as Peak SV Partners, who was previously Sequoia, Process, DST, and so on. In short, even though the name Chocolate Finance sounds a bit weird, it's not a scam, yeah? But then, how are they giving us a 4.5% return? When you deposit your money into Chocolate Finance, the money will be managed by a fund manager called Port Investments Private Limited, which helps sovereign wealth funds, global pension funds, banks, and financial advisors to manage their money. Turns out Chocolate is a shareholder of Port. Chocolate Finance is designed to look like a bank and compete with fixed deposits. Currently, the money is invested into 3 fixed income securities, but with a mechanism to smooth the 4.5% returns over time. First, the dimensional short-term investment-grade fixed income fund, which invests into fixed or floating-rate investment-grade securities such as bonds, debt securities, or government-related bonds. Second, the Fullerton SGD Cash Fund, which is a very popular money market fund that you will find in brokers. Third, the United SGD Fund, which is a fixed income fund by UOBM that invests in money market and short-term deposits. Or in other words, Chocolate Finance is not a traditional savings account like UOB1 or GSS, but rather is a managed account, which is similar underneath to the ones offered by ROBOADVISORS, such as Endowus Cash Smart and Safe Cash Plus. But the main difference is that Chocolate lets you put in and take out money anytime just like a bank, and also incentivizes returns on your first $20,000. Like all investments, the funds that Chocolate Finance invests in will go up and down. Check out this chart. The red line is the Fullerton SGD Cash Fund. You can see it slowly going up steady pp over the past 5 years. For the United SGD Fund, while it has gone up over the long term, in the short term, sometimes it has gone up, other times it has gone down. Same thing with the Dimensional Fund. It has also went up and down over the past 5 years. Here's what I think. Bond prices have an inverse relationship to bond yields, and because interest rates have gone up over the past 1 year, this caused bond prices to drop, which means that if interest rates continue to go up like what they did in the past, the funds will underperform and Chocolate will not meet its goal. But because we are now in a different environment as compared to the past performance is not necessarily a good predictor of the future. For this, Chocolate seems to be confident of the underlying future performance of the funds when smoothed. That's why they are willing to come out with the 4.5% fixed return on the first $20,000 and have a target 3.5% return for anything after that. In fact, the way they will earn is when the portfolio manages to outperform the target return, which in this case, it will be 4.5% and 3.5% per annum. This also means that their goals are in line with users' goals, which is to make money together. Because if users lose money, Chocolate Finance won't be earning anything either. They will only earn if they meet their target return. So what happens is that on your first 20k, with Chocolate Finance top-up incentive program, you'll be earning a fixed return of 4.5%. As for anything more than 20k, you'll be earning a target 3.5% return. Remember, it's a non-guaranteed return for anything more than 20k. So, depending on the fund's performance, you might make more, you might make less, or you might even lose money. So, that's the risk. Then, you might think, wow, 4.5% guaranteed return. But how long will this last? Later, they like GSS drop the interest back down, then how? For this, you don't have to worry because unlike GSS which surprised us, Chocolate has made it clear that this 4.5% return will continue until 30th June 2024 or until the total deposits exceed $500 million. So if you assume everyone who signs up deposits 20k, this would mean they will hit these limits at 25k signups, which I think would be pretty fast. But then, of course, anything is subject to change. They might just decide to extend if the underlying funds continue to perform well. Also, Singapore deposits will be instant, and withdrawals up to 20k a day would also be instant. But if you want to withdraw more than 20k a day, you will only receive your money in the next 1 to 5 business days. However, the biggest question is Chocolate Finance even safe to use? How do I know my money is safe in there? First, take note that your funds in Chocolate Finance is not insured by SDIC. What? No insurance? Later they chip and collapse, then I lose money, then how? Okay, the reason they are not SDIC insured is because they are not a bank, but rather they are a managed account of funds, which is also why brokers and robo-advisors do not have SDIC insurance. However, for this, you don't have to worry because Chocolate Finance assets are kept in separate custodian accounts, which in this case, it will be either State Street or HSBC depending on each underlying fund. This means that we will still have complete access and ownership of our assets, regardless of anything that may affect the company. Think of this like a fireproof safe inside the house. If the house gets burnt down, the things inside the safe are still intact. Next, there are no fees for using Chocolate Finance. There's no monthly fee and no withdrawal fee. Besides that, you will also see more features being added soon, such as their Chocolate Card, which is similar to a debit card, and Chop Pay, which would allow you to send money to any Chocolate Finance users all around the world. And that would be good because it would let you save on remittance fees. So those were some of the things that you need to know about Chocolate Finance. Personally, I feel that the 4.5% fixed return on the first 20k is pretty attractive. But if you are interested in trying out Chocolate Finance for yourself, all you need to do is pass me your phone number by filling up the form down below and I will refer you in. Don't worry lah, I won't sell your phone number. Unfortunately, there's no reward for signing up, but if you refer your friends and family, you will receive $5 for every sign up. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.